Hello. How's everybody doing? It's Financial Freedom Fridays. Gus Tucker. How you guys doing today? We're in September, which is Life Insurance Awareness Month. We're going to spend some time today talking about some basics as it relates to life insurance. You guys doing okay? You know, September 21st, right? Or 25. Do you remember the 20? I got a friend whose birthday is on that day. So we're singing that song to him, you know? And but also September 21st is the last day of summer, man. So I don't know where you live. I'm in Chicago and it's starting to turn cool, you know? But September is Life Insurance Awareness Month. And what I'm gonna do, I'm gonna skip to some things I wanna cover with you pretty quickly about life insurance, okay? It's Life Insurance Awareness Month. We want to evaluate your insurance needs. Now, here's the thing. What's life insurance? We're gonna get right to it. Um, you know, there are a lot of cultural things about life insurance and just ideas people have. I've talked to people from different backgrounds from other countries. You know, there are countries out there that don't have life insurance, and they use more of a communal way to handle loss, where everybody pitches in. All those things are fine, but life insurance, it's a contract. Okay, so when people talk about, well, I don't want to get ripped off, or I don't. Life insurance is a contract between a life insurance company and a policy owner, and both of you have responsibilities. Read the contract, okay? Read the life insurance contract to see what your responsibilities are and what the life insurance company's responsibilities are. Two basic responsibilities you have is one, don't lie on the application. Don't try to get some stuff by because the life insurance company, if you have a claim, they're going to research that to the nth degree. And if they find out that you didn't disclose something that you knew about, they're going to disallow your claim. So your first responsibility is, man, don't lie on that policy application. Put the truth, the whole truth, nothing but truth on there. Okay. Number two, make your payments. Number two, make your payments. Those are basically the only two things that can cause you to lose out with a life insurance policy. Is one, lying on the contract, and two, not making your payments. The life insurance policy guarantees that the insurer will pay a sum of money to one or more beneficiaries when the insured person dies. Okay, when the insured person dies in exchange for the premiums paid. Okay, so they're gonna pay. Okay, the life insurance company is gonna pay if the premiums are paid during the lifetime of that policy. Okay, so here's what life insurance is about. It's about managing risk or managing a threat. Let me ask you guys a question. Do you drive a car? I got pulled over this morning because I had my brights on and I didn't have my low beams on. The guy just gave me a warning. You know you can't drive with your brights on in the city? I didn't know that. Guy pulled me over. What did he ask me for? He asked me for my license and my what? Insurance. Because it's a law for you to have auto insurance if you're driving a car. Why? Because you don't have control. You may have control of your car, but do you have control of all the other cars on the road? No, you don't. What if one of them hits you? It creates a liability for them and for you, and maybe some other folks that get hit. So the insurance is a way of managing the threat or the risk of somebody being hurt financially by something that happens that's out of your control. That's why you have auto insurance. That's why you have renter's insurance. That's why you have homeowners insurance and you have life insurance. Question: are you 100% in control of what can happen to you? that can impact your life? Are you in 100% control? No, you are not. So you're covering the risk that something could happen to you in your life that would hurt your plans for the future. I joke with people. I say there's two things that can mess up your plan for your future, your financial plan for your future. You know what they are? They guess a bunch of stuff. They guess a bunch of stuff. Not saving money, not having a plan. I said one is dying. Die, Dying will mess up your plan for the future, at least your future on earth. You know what I'm saying? Dying will mess your plan up. And the second thing that'll mess your plan up is almost dying. And almost dying can be worse. Why? Because you alive and you still got all them bills. But now you got a new bill called being sick or hurt. You know what I'm saying? And you may have bills associated with that in addition to the bills that you were working with when you were hurt. You understand what hurt or sick? You get what I'm saying? So you have to plan for those two things, dying or almost dying. Okay? So, next thing about insurance. Life insurance is a legally binding contract that pays a death benefit to the policy owner when the insured dies. For a life insurance policy to remain in force, the policyholder got to pay that premium, either a big premium up front or regular premiums over time, however you set your policy up. Okay? When the person dies, the policy's named beneficiary. That's another thing. Whoever you want to get the money needs to be named in the beneficiary. Okay? And if you have a will or a trust, make sure those things line up. And you don't have one set of things in the trust or the will and one set of things on the policy. Make sure those things line up. Who you want to get what. Does that make sense? Update that stuff. Make sure it's in line with one another. It's basically two kinds of life insurance policy. Term life insurance expire after a certain number of years. Now they've got them to go up to 40 years. It's like renting. You buy the policy, it's good for a certain number of years. When those years are up, the policy's gone. And in the basic term policy, you don't get any money back. Nothing's returned to you. It's like renting an apartment. You rented it. When you moved out, you don't get anything back. Now, I know my security deposit. Okay. There's no security deposit on the life insurance. Okay. You don't get anything back. Now, they do have term policies that are called return of premium. What does that mean? Let's say you got a term policy for 20 years and you live the whole 20 years. They give you back all the money you paid over those 20 years. So the policy doesn't cost you anything. Now, they're more expensive than a regular term policy, but they're out there. You can get them. It's called return of premium. The next thing are permanent life insurance policies. They remain active until you die or until you stop paying premiums or surrender the policy. If you have a permanent life insurance policy and you keep making the payments up till you die, that policy is going to be enforced. Or if it's got enough cash value inside the policy to keep paying the premium for you, and you pass away while the insurance policy is paying the premium, man, you get your death benefit. Okay? Now, a life insurance policy is only good as the financial strength of the life insurance company that issues it. Get a good company that's A-rated. Check the ratings on the company you have your policies with. Use A-rated companies only. Okay? Now, there are some bailouts. States have guarantee funds that can bail out a life insurance company that can't pay, for the, the claims they have out there and stuff like that. But you don't want to depend on that. Get a good A-rated company that pays their claims. Okay? So what is life insurance? Now, I want you to think about something. What kind of life insurance should I buy? Generally speaking, there's two kinds. We talked about it. Term, which is for insurance with a limited time horizon. Let's just say you wanted to have a term policy that would pay off your mortgage due to the length of your mortgage. And let's say you had a 30-year mortgage. By a 30-year term policy, that if something were to happen to you, it would pay off that mortgage and your family wouldn't have to deal with it. College expenses. What if you're paying for your kids' college or you're wanting to save for their college, and if something happens to you, the money wouldn't be there? Man, buy a life insurance policy to help protect against that. You understand what I'm saying? But those things have time bounds on it. So a term insurance would be good in that case, and they're relatively inexpensive, especially if you're younger. Now, permanent insurance, you've got a need with a longer time horizon, and maybe you want to build up some cash even inside the policy in a potentially tax advantage manner. It's one of the things you can do inside of a permanent life insurance policy is build money up inside of it on a regular manner. Oh, Gus, I was told never mix your investments and your insurance. Never mix your investments and your insurance. I would tell you that never believe one size fits all. I'm not giving you advice here, but what I am saying to you is look at every strategy and evaluate it based on what it is you're trying to do and see if that strategy is best for you. It might not be best for your friend, but it might be best for you. Just get the numbers, get the information, look at it, plan it out, look at some alternatives within the same company, alternatives to other companies, and see what's going on. Shop, okay? That's what we do for our clients. We shop for them. It's also a way to build generational wealth through life insurance. You get a chance, read a book called What Would the Rockefellers Do? What would the Rockefellers do? And also look up something called a Rockefeller Trust. A Rockefeller Trust. That book outlines how the Rockefellers were able and have been able to maintain their company's fortunes over the years, over 100 years, whereas other families have come and gone, excuse me, and lost their fortunes, like the Vanderbilts and other families have lost their fortune. But a couple of things that the Rockefellers did inside that book. What did the Rockefellers do? It's a great book to read. It's not that long. You get some great information about strategies that you can do right here, right now, and make your money last longer. Okay? So you're either going to buy term or permanent insurance. Which one's better? It's not a matter of better. It's like which one better fits your situation. Okay? Now, how much insurance should you buy? Man, talking to a gentleman earlier this week. He's got two children, um, 4 months, no, three children, 4 months old, 4 years old, and 8 years old. He works in a profession. He's 35. He works in a profession where he makes over $100,000 a year, and his wife is a stay-at-home mom. Question: how much insurance should they get on the husband? And he was telling me he has insurance at his job and this, that, and the other. And I said, man, that's great. So let's see how much insurance we ought to have on you. So get out a pen and paper. Get out a pen and paper. A pen, piece of paper, and write that on a piece of paper. Dimer, Dimer. Just write down the side. Dimer. Write down the side of the paper. Y'all can see that? Just like that. And then I want you to write on this paper like death. What's that about? Funeral? How much is your funeral gonna cost? I know that people want to keep them real cheap, but real cheap could still be several $1,000s. And if people just don't have that laying around, where's it coming from? So write that down. What's the insurance? How much debt do you own? Not mortgage debt, but school loan debt, auto buying automobiles, homes, real estate. How much debt do you have? The average family in America, I think the last number I read it was about 70,000 cars and everything. 70,000. Now income replacement. Like this person I was talking about, they make 100 grand a year. They're 35 years old. How long could they be married to their wife? She's the same age, between 30 and 35. Excuse me. Huh? How many years you think? Now, here's what I said to him. I said, hey, man, if I was talking to your wife and I said, unfortunately, your husband died yesterday. He didn't die yesterday because he's here today. So he died yesterday. How long would you want to keep that 100 grand a year coming in? Ladies, your husband makes 100 grand a year or more and you pass away. How long do you still want that money to keep coming in? I'll wait for a couple answers. Talk to me. How long would you want that money to keep coming in if you had your way? How many years? At 35 years old, he makes over 100 grand a year. He's got 3 kids. So how many years would you want that 100 grand coming in if that was your husband? Any takers on that answer? Well, here's what I told her. I said, look, let's say you live another 30 years minimum times $100,000. How much is that? 30 times 100,000. It's $3 million. You got 5,000 for the funeral, 70,000 for the debt. That's 75,000. We're up to $3,075,000 right now. You think he has $3 million worth of insurance on his job? No, because they won't let him go that. Mortgage payoff. What's the average mortgage in your town, in the neighborhood you want to live in? No rat a tat 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 going on. Not nowadays going on everywhere, right? People leave one place, go to another one. I get it. But how much would a house in that place cost? I'm sure it's a fair amount. I'm gonna say it's 500,000, and we put 20% down, so we get a mortgage for 400,000. Okay. Now, how much are your kids' college education is going to cost? At the state school in the state where you live, or some prestigious school? I was reading U.S. and World Report. They were ranking the top 15 colleges in the United States. You know, top 15. And the school I went to, University of Chicago, was number 12 for overall school, not business school, just overall school. It was number 12. So how much is college going to cost? 4 years, 25 grand a year, 30 grand a year. Let's just put 100 grand in there. Then we got this thing called estate building. Estate building. What does that mean? You do all this stuff we're talking about, but you want to leave them some extra money to just help them get off to a good start. Yeah, they pay off the mortgage, but they got to live somewhere, right? Pay off the funeral, pay off your credit card debt. Okay, Lord willing, you paid off your mortgage, but are you still going to have other debts? At least 5 grand a month, would you say? That's average. You guys can scrounge around, and I can scrounge around and figure out how to make 50 grand a year. Okay. Your mortgage. How much is your mortgage? How much is your mortgage? Let's say these guys have a mortgage of $200,000. Okay. And the last thing is retirement. How much money do you want to retire on every month when you die? Let's say it was $5,000. Okay. $5,000 times 12 months is 60,000, right? So, how much insurance do you have to buy, okay, to create $100,000 in income coming off of that, or to create 60,000 a year coming off of that, 5,000 a year? Well, you have to have basically $100,000, because $100,000 times 5% is going to get you the 5 grand a month you're looking for. So it's $100,000 for every 10 grand. So it's 500 grand. What's 10? It's 10 grand for every $1. So for five, it's going to be 20 times. You get the picture, right? You get the picture. Now here's the real picture. You get hurt unexpected, everything's dropped. Who's going to pick up the ball? Well, you're going to have to for a while, and then you're going to hope to get friends and family involved to help you. But man, how much is it going to cost to run your life if, God forbid, your spouse was to pass away? Where would the money come from to run your life? Consider life insurance as a way to live life just like your spouse is there, but financially, they're not. And emotionally, they're not. Imagine your spouse, you go home tonight, you go to sleep, not being there. Ever, ever. How would that change your life and your sense of urgency to get things done if that was the case? Man, I think it'd be off the chain. So that's what I wanted to share with you about life insurance. So, guys, get it. We got a free estate planning webinar coming up next week, Thursday, September 28th. It's at 7 o'clock. It's free. All you got to do is dial in that number, 312-352-0701. And you're in the room. You're gonna meet a great attorney to be able to put together a great webinar for you so you can see why you need to have an estate. And he's also going to reiterate why you should have life insurance, because they go together. Okay. So plan to come to that 7 o'clock next Thursday. 7 o'clock next Thursday. No password needed. There's the phone number. 312-352-0701. Get there early. We had a packed house this week. Okay. Estate plan seminar. That's the end of my time with you today. It's a little short, but powerful. Why do you need life insurance? We covered that, right? We covered it's a contract between you and the company. They contract to tell you what they're going to do and what you do. And if they don't do what they're supposed to do, you can sue them. They're used to being sued, man. So, first thing is understand why you need them. Life insurance, why you need it, what's the benefits going to get for you. One is if you pass away, obviously it's going to help you. But let me tell you about this. It's called living benefits. It's from a life insurance policy. You don't pass away, but you get like a heart attack, stroke, cancer. It'll pay you a percentage of the death benefit in cash almost immediately so you can use it for your illness. Now, it needs to be legit to get the money out, okay? Don't go in there with no forms and nothing saying, let me get my money out. Don't do that, okay? But it's called living benefits, so check that out on any policy you look at. But hey, that's what I want you to know. Life insurance is a contract. If you do what you're supposed to do, the life insurance company is going to do what it's supposed to do. Otherwise, they wouldn't have the A rating. It talks about some of the stipulations about it, how to keep the policy going if it's a term policy or a permanent policy. Because permanent, you got the money, boom, you're good to go. The initial payment as well, the initial payment, and you're good to go. So they're going to send the payment information around to you, and make sure that you get life insurance on yourself. Use that dimer debt. Use this to figure out how much you need. Okay, it's relatively simple. How much is your funeral going to cost? How much are you in debt right now? How much income do you need to replace for your loved one? For how long? You need to pay off a mortgage. Is there estate building? Are you building money for the future? Putting it away. Same with retirement savings. Okay, that's enough preaching for one day. Go out and get your insurance. Don't be holding the bag, right? And be going out there doing some kind of GoFundMe page or something. No, not your family, not on your watch, not on your watch. Make this happen. And it's very reasonable. It can be very reasonable. It'll shock you how much it costs. Okay. But if you wait, it's not, it's pretty stiff to get any amount of insurance. Okay. So without that, no questions. We'll see you guys soon. Financial Freedom Fridays. Like, subscribe, tell people about it, comment, and you guys have a great weekend. Okay. Take care. Bye.